This is Nikki Bell. Let's go. All right, we're going to continue today. We are on part 2 of challenges that investors face. Remember, you can place investors with you as a founder, or you as a business owner, or you as a startup, just as long as you have, as long as you are the decision maker. So the next point that I wanted to bring up was that the too much diversification challenge. What this means is diversification is a strategy where investors buy various assets to reduce the chance of losing out on significant gains while also lowering their losses. Investors diversify their holdings among various companies, industries, countries, and asset classes rather than putting all their money into one company or a small number of assets. However, if you've done too much diversification or done incorrectly, you might not lose much, but you won't gain much earlier. You might also take on one or more risks than you anticipated, and you might pay excessive fees. Solution? The best solution to avoid over-diversification is to keep your portfolio to a manageable level. For some reason, this means only keeping maybe your top 10 investments as long as they're in different industries. Others avoid over-diversifying by reducing their holdings in particular sectors. For example, volatile materials producers or industrial stocks, or difficult to understand sectors like biotechnology stocks for diversification. So what's this mean? All right, first of all, I don't particularly deal with the assets, the trades, the stocks, and all this, right? And that's okay. But this is across the board when you hear me talk about common sense. It's common sense not to run around like a chicken without a head. So it's common sense not to have your hand dipped in the cookie jar or too many cookie jars all at one time. Okay? This is what this is saying. Like, be knowledgeable. Be aware of what you're doing. And if you are unsure, then you get an expert to help you understand. Okay? And, for some of you that listen to me and you've been investing forever, it's always good to go back to the basics. I get that a lot. Oh, why do you talk about things like in the beginning? Because for me, it's always get back to the basics. I always keep information fresh and new and always refer back to the beginning, because you never know that something could have been missed, right? And I have just so many examples of things. Like, I get people who say, oh, I had a client and the investor pulled out, or the venture capitalist firm pulled out. And I'm like, wait a minute, first you're representing this client and then they pulled out. And they did it in just the most horrible way, where everything was set to go. And then at the last minute, the venture capitalist company or the, investor pulled out and gave some big excuse. And that's a problem, okay? Because if someone in my position is representing another entity, individual, investor, business owner, whatever, we also are accountable in the sense that we have to do our due diligence. We have to do our research. We have to ask for the correct documentation to make sure everything lines up. So if I, back in the day when I would represent companies and look for those types of investors, there's certain things that I would ask of the investor, because it's not, all hands off deck. It's all hands on deck. In order for all hands to be on deck, everything needs to be transparent, okay? It's not just, the company that needs to submit documentation. It's also the investor. We need to know that we're dealing with real folks. And so very, very, very important, people. You got to really be asking these questions and really, investigate is the word. And that's what I do. I will, if a company comes to me and says, can you represent me? This is what we're doing. I will not only investigate the company wants to bring me on, but I will also investigate whatever they're looking for. And if they are self-funded, then that's a whole nother thing where, to me, that's all about strategy. So we're going to sit down, we're going to do a strategy, and we're going to be able to execute on it, not just talk about it, okay? That's what, another thing I don't do is just talk about things, right? You have to actually be doing these things, putting them into place, putting them into practice, okay? Very, very important. So the next one, I think that we'll save it. and we'll do a part 3. Y'all. All right. So you know me, Nikki, the strategist. Here we go. This is Nikki Bell.